If you're looking for more money, better success in your property investment or other areas of your life or more wealth, this particular episode of the Michael Yardney podcast is for you. I hope you get the feeling that I enjoy putting these shows together for you twice a week, but today's a particularly special episode where I think I've got 3 really good messages for you. Not that the other shows aren't good, but I'm sure you're going to get benefit from today's show as we discuss one thing you're going to have to change to become a more successful property investor, and it's not what you think. I'm also going to share with you what's the right type of property investment for this stage of the property cycle, because this year is going to be very different to the last couple of years, isn't it? And then in my mindset moment, I'm going to explain to you an important trait of successful people. And if you can pick up on this, there's no reason why you shouldn't be able to achieve the same success as well. So lots to cover. Thank you for joining me once again for today's episode of the Michael Yardney podcast.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect and pass on your wealth through strategic property and wealth advice. Now here's your host, Michael Yardney, Australia's most trusted property commentator who has once again been voted Australia's leading property investment advisor. That's the 5th time he's won a similar award in the last 7 years.
Today I'd like to share with you one thing you're going to need to change to become a more successful property investor or business person or professional to change your level of wealth. I found for most people to change their level of wealth, they must change. Now, rather than disagree, please humour me and listen to this podcast because I think this session is going to be one of the most important ones I've recorded for quite some time. You see, some of us love change. Sometimes we love change. Sometimes we hate it. Some of us like to change, and I know a lot of other people fear it. So why is change so difficult for us? Because change makes us move out of our comfort zones. And it takes courage to leave something you're familiar with, to try something new. One of the jobs of our subconscious mind is survival. It's to protect us. It likes to keep things the same, preferring safety and security over the untested, over the unproven. Haven't we all heard it say, better the devil you know than the devil I don't know? We tend to believe that if we stick with what we know, with what's familiar, then we won't get hurt. Now, that may have been a protective mechanism many, many years ago when we were wandering the savannah and saber-toothed tigers could have got to us. It's not working for us financially today. The problem is, in terms of wealth creation, it's not what we know that's holding many of us back. It's what we think we know that isn't so, that isn't right, that's holding us back. Now, I know that you're used to listening to my thoughts about property on this podcast and reading about them in my blogs. But in this session, I'd like to share my thoughts on wealth creation. Look, that's really what we're here for anyway. That's the reason you're involved in property anyway, isn't it? Because you want to become more wealthy. And I'd like to discuss why many Australians are not as far advanced with their wealth creation as they'd like to be. They're not as successful as they'd like to be. They haven't developed the financial freedom they deserve. Yet they continue to do the same thing over and over again, hoping somehow it's all going to be different. Think about it. If you keep doing the same thing over and over again, you're going to keep getting the results you always got. If what you were looking for was where you've been looking, chances are you'd already have found it. So doing more of the same thing, but even harder or even longer or even faster, isn't usually the answer. Being willing to change will usually create better results. The good news is you can have more because you can become more. So what holds most of us back? It's what I call our wealth operating system, our financial blueprint, the programming we received as a child. Now, I initially learned about this in Wallace Wattles' book, The Science of Getting Rich, which he wrote almost a century ago, and more recently it became very popular in T. Harv Eker's book, Secrets of the Millionaire Mind. And what they said was your thoughts lead to your feelings lead to your actions, and your actions lead to your results. Let me just repeat that so you understand. Your thoughts lead to your feelings, Your feelings lead to your actions, and your actions lead to your results. So it's no coincidence that your inner world creates your outer world. The programming you received, usually as a child, leads to your thoughts and your fears and your limitations about wealth creation today. So one of the first steps in change is changing your thoughts. So how do you think about money? How do you think about success? How do you think about prosperity? What do you say to yourself? What is that little voice in your head saying? For many of us, thoughts revolve around fear, around scarcity, around limitation. The problem is that what you focus on expands. If you think about fear, scarcity, and limitation, what do you achieve? Remember, I said it. Your thoughts lead to your feelings lead to your actions, and your actions lead to your results. So money is a result. Wealth is a result. Your health is a result. Your results in all fields have been caused by you, by your actions. Now, these occur in your outer world, but they're determined by your thoughts and your feelings in your inner world. So for many of us, our current mindset just won't let you get to the next level. As I said, it's not what you don't know that's holding you back from succeeding. I mean, people go out looking for more knowledge, more information. It's not what you don't know. It's what you think you know that isn't correct that's your greatest obstacle. The way most people think is their greatest barrier. And as I said, it's because of their programming, their wealth operating system, the way we were programmed by the things we heard, the things we saw, the things we experienced as a child. This is the type of thermostat that was usually set in your childhood and gives each of us our feelings and our beliefs about money and wealth now, many, many years later. You've heard me and Tom Corley in our regular Rich Habits, Poor Habits chats talk about how most of our habits are formed in the first 8-9 years of your life. The problem is, for most Australians, for most people listening to this podcast all around the world, because I know we have a very large audience, their thermostat isn't set for wealth. Many of us need to intentionally change our inner world, intentionally change our way of thinking. We need to start thinking about prosperity, about abundance, about success to enable us to attract those very things. Now, please don't think, oh, Michael's on a rant today. He's talking all woo-woo metaphysical stuff. When I get together with the high net worth clients at Wealth Retreat every year, we do it in June, the second weekend of June every year, and we got a room of 50, 60 high net worth, already successful business people, entrepreneurs and investors. And people from the outside would wonder, well, why would they go and spend $10,000 in a week to learn all these new things to improve when they're already successful? And it's because they want to get to the next level. They want to turn up their thermostat, and they do, because I see them when they come back and I see how much more they've achieved. By the way, I know it's many months off, but go and have a look at wealthretreat.com.au. Set aside the second weekend of June and join us. You see, many of us need to intentionally change our inner world, our way of thinking. And those who join us at Wealth Retreat or are part of my mentorship program know that is how important it is. Firstly, we need to change the way we think about ourselves. We need to start thinking about abundance, prosperity, success to enable us to achieve those very things. We need to see ourselves as a wealthy person, as a wealth attractor, as a wealth creator. This means we may need to change some of the ingrained thinking patterns or overcome some negative ways of thinking that have developed as a result of past experiences. So, why are we scared of change, as I've said? Why we find it hard to change? Why? In fact, the only constant in this world, if you think about it, the only thing you can absolutely count on is change itself. Often it happens, as I said, because our subconscious mind is programmed to keep things the same, to protect us. As I said, better the devil you know than the devil you don't know. Yet most successful people all share one critical characteristic, the trait of adaptability. They embrace change. They look for opportunities to expand and learn. And another common characteristic of successful people is that they've got a mentor and they belong to a mastermind group. They hang around other like-minded, successful people. As I said, like being part of my mentorship program, like coming along and joining us at Wealth Retreat. Because if you continue to do the things you've always done, you're going to continue to get the results you've always achieved. And if you want to move forward in your wealth creation, I actually believe it's Einstein who actually said it. The definition of insanity is doing the same thing over and over again, but expecting a different result. So if you're wanting to move forward, you're going to have to do things differently. Results change when people change their way of thinking. Now, if anything I've just said has made an impression on you, you're going to realize if you wanted to go to another place in your life financially, then you're going to have to do some things differently. And doing those things differently requires thinking differently. If you change your thinking, you're going to change your actions. And if you change your actions, you're going to change your results. And the investors I've seen stuck in the same financial position and not moving forward didn't understand the importance of what I'm sharing with you today. However, as I've already explained, you can have more because you can become more. You see, here's the other side of the coin. Unless you change how you are, you're always going to have what you've got. Now, all this property stuff I talk about and I write about and the other guests here talk about is very powerful, but on its own it won't do. In order for you to have more, you need to become more. The rich keep getting richer because they're programmed and conditioned to, while most of people I know are boxed in by the boundaries of their thoughts. Took me a while to realize this, but when I studied this, I finally learned that wealth is a result. It's the result of your thoughts and your beliefs which lead to your actions. So it's important for us to understand that we're all fully responsible for our financial results. If things aren't working out as you want them to at the moment, you need to stop taking the easy way. You need to stop blaming external factors. It's not your boss's fault. It's not the government's fault. It's not interest rates. It's not that there's a bad property market. It's not that you didn't get a good education. And it's not even the lack of information. You need to just stop justifying why you're not financially successful yet. Most of what you've got today, you've attracted by becoming the person you are today. If you want to change your life financially, you've got to change first. Everything you're doing right now, you're in the habit of doing. And everything you're not doing right now, you're in the habit of not doing. And if you've heard me speak on this topic at my seminars, if you've heard me rant about the psychology of success in this podcast, you'll know I suggest you always get what your subconscious wants, not what you think you want. So, would you like more wealth? I know you may not be comfortable in me saying it, but the level of wealth you're currently experiencing is the level of wealth you're most comfortable with. You're going to say, no, it's not, Michael, I'm not comfortable. Well, if you weren't, you would actually move and do other things. You're never going to create more wealth than you're unconsciously comfortable with. And this is happening at an unconscious level where I see people sabotage themselves over and over again by saying, I want to lose weight, but they eat. By saying, I want to become wealthy, but they spend money on cigarettes or on gambling or other things. They say, I want to learn more, I want to become more successful, and they don't do it. So it's the actions that you're doing because the thoughts that you're thinking are getting you where you want to. So if you want to understand a bit more about how you could change and move forward to the next level of wealth, why not explore my mentorship program? I've been doing it since 2006. It's going on a long, long time, and I've mentored over 2,500 people. And it's not expensive, and it's the only way you're going to have one-on-one chats with me. One of the most successful ways to succeed in anything is to model or copy other successful people. So if you go to michaelyardney.com.au, and there'll be a link in the show notes, michaelyardney.com.au, find out about my mentorship program, find out exactly what other successful people have done, and follow their footsteps, so that you can become successful as well. Now, this concept works for virtually anything, including growing your wealth or property investments or achieving financial independence. So if you go to michaelyardney.com.au, you'll have a chance to have me as your mentor and be part of my inner circle, because I'd love to share your wealth creation journey with you. And if you're really, really serious about it, as I said, I know it's a long way off. It's in June every year on the Gold Coast. Check out Wealth Retreat. wealthretreat.com.au. Spend some time finding out why a group of already successful business people, entrepreneurs and investors get together once a year for 5 days and make a commitment to yourself to join us. And if you choose to join us and you actually say that you heard about it on this podcast, I'll gift you my mentorship program for free, so you get $3,000 worth of mentorship program. It's a no-brainer. Now, you can't just buy Wealth Retreat online. You've actually got to express an interest. So go to wealthretreat.com.au, learn about it, and when you leave your details there and Joe from my office gives you a call, mention that you heard about it in this podcast. And if it's right for you, I personally will have a chat, because I guarantee that when you go there that you're going to get what you desire. Otherwise, I give you your money back. Couldn't be fairer than that. I look forward to being part of your long-term wealth creation journey. We're well into a new year. We're well into a new decade. And the property cycle is well into a new property cycle. And with our property markets on the move, it's becoming apparent that more and more investors are looking for the next hotspot. The problem is hotspotting is about short-term speculation, not long-term wealth creation. Most property investors are trying to build their asset base so that one day they can replace their personal exertion income with their property income. But the key to building a substantial property portfolio is to use your first property to leverage into your next property, and then using those two properties to leverage into more investments, and so on and so on. And you're only going to have the ability to do this if you invest in the type of locations that are going to consistently provide long-term capital growth. But by definition, hotspots are not these type of areas. Just as quickly as they heat up, property values in these locations can come off the boil. They can cool down very quickly. Now, sure, many of the hotspots predicted by some of Australia's analysts turned out to be correct. Some of the regional areas, some of the mining towns boomed, well, at least for a while, as investors chased up prices. Because if you point to a hotspot which doesn't have a big turnover, and all of a sudden you get a few investors in there, what tends to happen is you create a self-fulfilling prophecy, don't you? And you push up prices. But the problem is, unless you get the timing right, chasing the next hotspot turned out disastrous for most investors. After the initial price growth, as I said, often driven by a flood of investors in these small markets, prices stalled and often dropped, sometimes substantially, leaving many of these investors with properties worth considerably less than they paid and with less rental income than they expected. And I know, because we see them, they come to Metropole, they ask us to try and help them. We can't. Sometimes they're stuck. They're unable to sell their property as buyers have abandoned those markets because there's little depth from the local demand. If you're into investing in short-term trends, being right isn't what's important. It's being right at the right time that counts. And very few of us can do that. So the history of property investors trying to find the next boomtown is littered with people who got the story right, but the outcome wrong. So instead, I buy in areas that have got a proven long-term history of outperforming the average capital growth, areas that are likely to outperform because of the demographics of the people living in those areas. Hotspotting is virtually the opposite of this sensible, not so sexy, tried and tested method of successfully building a property portfolio. You see, what I look for is what's always worked, not just what works now. See, with this new property cycle upon us, if history repeats itself, and it will, many investors are going to get it wrong. They're going to be looking at the type of properties that work now, while sophisticated investors are only going to put their money into what has always worked. Sure, there'll be another hotspot, a new hotspot, which will be the future not spot in a year or two's time. Yes, some regional areas will outperform certain parts of big capital cities. And as some speculators are going to make money out of the next fad, touted as the next get rich quick seminar, most property investors are never going to develop the financial independence they deserve. We know that. 92% of investors, 1.9 million Australian property investors, never get past their second investment property. Only just over 20,000 own 6 or more properties. You've got to do it differently to that vast majority. In my mind, the long-term investment strategy, my strategy, doesn't change because of short-term changes in the economy or in markets. I've only invested in the type of property that's always been a good investment rather than what works just now. I know the location is going to do the bulk of the heavy lifting in my property's performance, so I only invest in high growth suburbs and then only in our capital cities, only in our 3 big capital cities, knowing that their economic fundamentals, their population growth, their gentrification is going to underpin my property's performance. We're into a new decade. Our population's growing at around 400,000 people per annum. We're requiring around 170, 190,000 new dwellings per annum. But the majority of those people are moving to the 3 big capital cities, and particularly Melbourne and Sydney. So I don't fight the big trends. Sure, there's growth in some regional areas. Sure, there's economic growth in some of those areas. But the youth are tending to leave those areas to live in the big capital cities. The jobs in those areas tend to be more casual, more part-time, more seasonal. Why fight the big trends? So I only buy in the capital cities, I only buy in certain locations in the capital cities, and I only buy investment-grade properties, ones that be in continuous strong demand by affluent owner-occupiers. And I look for properties with a high land-to-asset ratio. So property investments dogged with dozens of different variables, and they're going to, again, in this new cycle, be many property spruikers attempting to make an exact science out of this. But the reality is there'll never be a perfect time to invest, or there'll never be a perfect property to buy. That said, there are some principles that can be applied whenever you look for investing in real estate. And if you apply these, you can be assured that you're going to be as comfortable as possible, exposing yourself to the least risk. So let's have a quick look at these principles. Number one, while many people generalise about the property market, there are many sub-markets around. Each state's a different market. You see that over the last couple of years, how some states have performed very differently to others. And then each state being at its own stage in the property cycle, within each state, there are many sub-markets defined by geography, by price point, by type of property. So don't generalise. You can't just buy in Sydney or Melbourne or Brisbane. You've got to find the right location within that area. Rather than trying to time the market, this is another important strategy that stood the test of time. Rather than trying to time the market, buy the best asset you can. Timing your purchase will give you a one-off bonus. However, owning an investment-grade asset that grows at wealth-producing rates of return is going to see your property portfolio outperforming the long term. The third important strategy I'd like to share with you is strategic property investors manufacture capital growth through property renovations and development. Over the next couple of years, in a lower inflationary, lower wages growth, lower interest rate environment, we won't be seeing a stronger capital growth as we saw in previous cycles. So the market won't do the heavy lifting for you, and it won't get you out of trouble if you buy the wrong properties. But I love adding value to my properties by using the technique of forcing appreciation by manufacturing capital growth through renovations and development. Now, another factor to remember is that our property markets are not only driven by the fundamentals, all those reports and those research things that you see, but often by the irrational and erratic behaviour of an unstable crowd of investors. So while the long-term performance of the property market is influenced by the fundamentals, it's influenced by owner-occupiers who have a level of stability in the market, the short-term performance is much more affected by market sentiment and by investor sentiment. Another lesson I'd like to leave you with is treat your property investments like a business. Stick to a proven strategy. And if you do that, it's going to take the emotion out of your investing. Don't make 30-year investment decisions based on the last 30 minutes of news that the market's good, the market's bad. I've often said my system of investing is boring. It's too boring for intelligent people. But property investment shouldn't be exciting. Property investment should be boring so the rest of your life's exciting. And the last lesson I'd like to leave you with is recognise that residential real estate property is a long-term play to set up you for your financial future. And when you buy property, you've also got to buy time to see you through the ups and downs. So get a right finance strategy to set up buffers to ride the property cycles, get the right ownership strategy so that you can leave a legacy to future generations. So It's not just about property. It's about having the right long-term property investment strategy, the right finance strategy, the right ownership structure strategies, and ensuring yourself, because I can assure you that in this new decade, the property market is going to keep cycling. The news is going to keep being positive and negative. The property pessimists are going to be out there to test your resolve, and the market is going to test your nerves. So rather than looking for something that's only going to work now, by going back to the proven principles of what's always worked, you're going to be in a much better position. At the beginning of the show, I mentioned to you that I thought today's episode was particularly special, and I hope you enjoyed the first two segments. And I've got one more, a little story about somebody who's become very successful that I hope you're going to enjoy. More importantly, I hope you're going to get some lessons from. And that's coming in just a moment. But I explained to you a moment ago about how you've got to own the right sort of properties at the right stage of the property cycle. And I've got a special gift for you because you listen to this podcast. You probably found out now that it's this time of the year, once a year, I run a series of trainings in Melbourne, Sydney and Brisbane, my one-day annual property market and economic update. And joining me is Dr. Andrew Wilson, Ken Race, a group of local property experts and some finance experts. And I'd like you to join me as my guest. I've been running these since 2002 or 3 now, and the Australia's longest running annual property market updates, but they cost money because it takes me time and effort to put on. But as a listener to my podcast, I'd like you to join me by using the coupon code podcast at propertymarketupdate.com.au. There'll be a link in the show notes. You'll be able to find out all about it. And I'd love to see you there as my guest so you can understand more about what's happening, so you can take advantage of the new property cycle and become a more successful investor. Now, let's get on with my mindset moment.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In today's mindset message, I'd like to share the concept that successful people start before they feel ready. Now, let me tell you a story. In 1966, a dyslexic 16-year-old boy dropped out of school. With the help of a friend, he started a magazine for students and made money by selling ads to the local businesses. With only a little money to get started, he ran the operation out of the crypt inside his local church. 4 years later, he was looking for ways to grow his small magazine and started selling mail-order records to the students who bought his magazine. The records sold well enough that he built his first record store the next year. After 2 years of selling records, he decided to open his own record label, his own recording studio. He rented the recording studio out to local artists, including one named Mike Oldfield. In that small recording studio, Oldfield created his hit song Tubular Bells. Boy, does that bring back memories to me. I love that. And if you've been to any of my seminars, you know I play some Mike Oldfield music at the beginning of the seminars to create atmosphere. Anyway, Mike Oldfield became one of the record label's first releases. And that particular song, Tubular Bells, went on to sell over 5 million copies. Over the next decade, that young boy grew his record label by adding bands like the Sex Pistols, Culture Club and the Rolling Stones. Along the way, he continued starting companies, including an airline business, then trains, then mobile phones, and on and on. Now, almost 15 years later, there were over 400 companies under his direction, and today, that young boy who dropped out of school and kept starting things despite his inexperience, despite his lack of knowledge, today that young boy's a millionaire. And I guess by now you've recognised it, you've guessed it, his name's Richard Branson. Now, I recently read a story of how he started Virgin Airlines, and this tale seems to encapture his entire approach to business and life. Anyway, the Virgin went something like this. He said he was in his late 20s and he had a bit of a business, but nobody knew who he was at the time, and he was headed to the Virgin Islands because he had a pretty girl waiting there for him, so he was determined to get there on time. But at the airport, The final flight to the Virgin Islands had been cancelled because of maintenance or something. It was the last flight out for that night. So Richard Branson thought, this is ridiculous, and he went and chartered a private aeroplane to take himself to the Virgin Islands. But he didn't have any money to do so, so he picked up a small blackboard and wrote something like, I don't know, Virgin Airlines $29 on it, and went over to the group of people who'd just been on that flight that was cancelled, and he sold tickets for the rest of the seats on the plane and used their money to pay for the chartered plane, and they all went to the Virgin Islands that night. Now, amazing story, isn't it? Of course, Richard Branson's an extreme example, but we could all learn something from his approach. I guess one way of summarising the habits of successful people could be successful people start before they feel ready. If there was ever anyone who embodied this idea of starting before they felt ready, it really is obviously Richard Branson. The very name of his business group, Empire, Virgin, apparently he chose it because Branson and his partners started out as virgins when it came to business. Branson started so many businesses, so many ventures, charities, expeditions. It's simply not possible for him to have felt prepared, qualified already to start all of them. Couldn't have. In fact, it's unlikely that he was qualified or prepared to start any of them when you think about it. Apparently he's never flown a plane, didn't know anything about engineering of planes, but he started an airline company anyway. He's a perfect example of that saying, the chosen ones choose themselves. So my message to you today, at the beginning of a new decade, a time when you've probably got some good plans for yourself, is if you're working on something important, you'll never feel fully ready. A side effect of doing challenging work is that you're pulled by the excitement and pushed by the confusion at the same time. You're bound to feel uncertain, you're bound to feel unprepared and unqualified. But let me reassure you of this. What you have right now is enough. You can plan, you can delay, you can revise all you want, but trust me, what you have right now is enough to start. It doesn't matter if you're trying to start a business, trying to lose weight, write a book, achieve any number of goals, get going with property investment. Who you are, what you have, and what you know right now is good enough to get started at least. Now, we all start in the same place. No money, no resources, no contacts, no experience. The difference is some people, the winners, choose to start anyway. No matter where you are in the world and regardless of what you're working on, it's the start of a new year. Well, we're a little bit into it. At the start of a new decade. I hope you're going to start before you feel ready. We covered a lot in today's show. I hope you got some benefit from it. And if you did, I'd like you to pass the message forward to other people. By now you know my mission is to make as many people as financially fluent as possible so they can become more financially successful. So tell somebody about the show or leave us a review on iTunes or Stitcher or wherever you listen to this show. That'd be great to tell the whole world. I always appreciate it when you do that. And I mentioned a couple of ways that you can also get to the next level, and there's going to be links in the show notes to help you. There was my mentorship program I mentioned, Wealth Retreat. Boy, is that going to be a special event this year in June. I know it seems like a long way away, but find about a Wealth Retreat, set aside what's the Queen's birthday long weekend, the 6th to the 10th of June, so you can join us at Wealth Retreat. Now, that's an expensive exercise and it's not for everybody. But what is for you is to join me at my National Property Market and Economic Updates. And you can come as my guest to that. There'll be a link in the show notes as well so you can come along and reserve your place. Because every year they book out, and I only do this once a year. And this year, the message is very, very different. So I'll still be keeping you up to date twice a week with the regular episodes of the Michael Yardney podcast. In between, you can catch up with me on social media. Just look for Michael Yardney or at propertyupdate.com.au, where you can join over 80,000 other subscribers to get my regular property updates. Look forward to catching up with you real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?